Right. Evening, everyone. We'll get started for today's session over here. Okay, cool. I think first up, we'll immediately talk about the updates from the Fed, which is the FOMC. Okay, that's the most probably the most exciting piece of news from last week. And then of course, share with you a little bit on the big picture perspective that I have in the market, and we'll dive into then the individual opportunities that perhaps are available that you can focus on for the week. Okay, so first up over here, let me bring you the chart on dollar index. Okay, I think there's no surprise. You guys already kind of like aware. Okay, the dollar has strengthened. If you actually even read into what happened for the FOMC and of course the summary of the press conference, you probably be able to understand and explain why the dollar actually strengthened so significantly for the past 2 days, right, since FOMC. Okay, so for those of you who are not aware, of course, this is pretty important to you as a trader as well. Whether you are a technical trader, or you are just the FX side, okay, or if let's say today you're also trading on stock market, it doesn't matter, right? At the end of the day, if you're in the financial market, I always say this: the more you know, the more you're able to understand the mechanics of the market. Um, the better you're gonna be equipped, right? And I always say, trading, there are many methodologies, many forms of analysis, but at the end of the day, okay, it's just like a toolbox, right? If today what you have in the toolbox is just a hammer, okay, and so happen if today you need to hit a nail, then yes, you got the right tool, the best tool to hit the nail. But if today you would like to remove a screw, okay, and all you have is just a hammer, you can't remove the screw, right? You need a screwdriver. Okay, so same thing in the concept of trading over here. If you're only understanding the markets based on the technical point of view, which is looking at charts, looking at pattern candlesticks, you are able to make money, yes, but you're not gonna understand what caused this move here. Okay, and you will not have that conviction and confidence compared to another trader who kind of can understand what happened, that kind of causes this move. Okay, so to give you a quick understanding of that, of course, this move is driven by fundamental and sentiment. Okay, so last Thursday, or Wednesday, depending on where you are in your time zone, the FOMC meeting was released, and initially, okay, so over here I'll probably type in a little bit. Okay, initially they were talking about how they'll start to do tapering. Interest rate is probably going to start increasing in 2024. But last week FOMC they actually brought it back to 2023, right? So that is what we call a hawkish sentiment, okay, or you can call it a hawkish tone from the Fed, okay, and that's where you can see the short term, the dollar actually strengthened very significantly, right? So that's the current push, right? But if today, okay, this is the sentiment and the tone, right? However, if you take a look at what's happening from a fundamental perspective, okay, for now, the Fed is still doing QE. Okay, nothing has changed. They are still doing about 120 billion per month of purchase in terms of their treasuries, right? So that is still quantitative easing. Okay, and they're not stopping that, they're not scaling down, they're still doing exactly what it is. But the market actually started to price in this move, right, from 2024 to 2023. Okay, so from here I hope you can able to understand, the different mechanics that can affect the price movement in the market. Definitely not your chart. Okay, so with that, what I'm seeing over here from a fundamental point of view and of course from a sentiment point of view, okay, is short term sentiment is in play. Okay, I would say for this week here we can see maybe the dollar continue to strengthen because that's where the sentiment is still in effect. Of course, it's not going to be as strong as what you see here anymore, but that's the short term move. Okay, overall, fundamentally, nothing has changed, which means that eventually, if you're looking at a horizon of maybe 6 months to a year, okay, which is all the way to maybe 2022, that's where the Fed has yet to start tapering, right? Because 22.3 is their target right now. So maybe from the next 6 months to a year point of view, fundamentally the dollar will probably weaken as well because of an oversupply and increase of money supply in the dollar. Okay, that will cause a devaluation of the dollar eventually from a fundamental perspective. Okay, so that's where you can see before we even look into the charts, understanding the sentiment, understanding the fundamental, kind of gave you a broad picture overview, right? And when you approach the market, you can approach it in kind of like a confidence way, right? You don't go in blind, right? That's the part where I want to highlight to you guys today. Okay, so for me, short term, which is for the week. Okay, so this week itself, we're definitely gonna be focusing more on, like, if you're trading the dollar, you definitely focus on upside, right? Because the sentiment are still there, the momentum from price you can see is still upside. However, if you're looking to buy it, okay, take it as short term, which means any buy on the dollar, you wouldn't want to hold it like 3 months, 6 months down the road. Okay, so if you're looking at dollar index, maybe on an even higher time frame perspective, like daily, right, there's a good chance, of course, this week we're gonna see continued upside, okay, towards somewhere around 9345, which is the previous resistance area or key level. There's a very good chance where you're gonna see some resistance, and probably from here, maybe the sentiment died out and the fundamental forces kicks in again. You might see the dollar weaken from there as well. Okay, so from a technical point of view, charts do tell us which area you want to keep an eye on, the momentum of it, and of course, the timing of how you're going to execute a trade. Okay, but the sentiment and fundamental give you that background information on of like aligning your direction at the same. Okay, so over here, short term, if you're looking at the dollar, of course, this is definitely a very strong impulse push. Do not jump in, okay, every time you see an impulse, because most likely what will happen is this probably gonna do a reset, or we call it a correction, and before it decide to maybe continue on from there. Okay, it might be also the case where for the next maybe 3 to 4 days, it's probably just gonna develop into a correction, possible as well. Okay, so that's the view on the dollar from a big picture perspective. Okay, and if today we will go to the equities market, which I'll use S&P, okay, as a benchmark for the global equities, you do see that we have quite a decent dip, okay, since FOMC. Okay, and this is the part where I also want you to then understand a bit in terms of not just from a technical point of view. But the idea here is that if the Fed increases or looking to increase rate, right, generally your equities will drop. Okay, that's the general trend. And of course, the opposite stays true as well. If the Fed is maintaining interest rate at a very low point, and they're continuing to do QE, which is basically printing money, releasing it into economy, then of course, your equities market are going to be supported. Okay. So again, I want you to see why we always say don't trade when you see an impulse move, because you can see S&P as of right now, we are seeing kind of like a V-shaped formation, right? Which is again, fundamental, nothing has changed, right? So this push down is merely really sentiment, short-term emotional reaction from the market. Okay. Now, having said this, if you're looking at the equities or the stock market, okay, I don't think you need to be over worried, okay, with what has happened last week, right, or the past 2 days, because even if, let's say, this continue to come down all the way towards this low here, which is 4055 area, right, it's really not that huge, okay. If I were to give you a perspective of that, that is about 5% drop. It's a very healthy correction in the market if you see a 5%, right? There's nothing to be alarmed of, okay? However, if it starts to drop beyond 10%, okay, maybe I'll show you what that is. Okay, beyond 10%, which is over here, happened in 2020. Okay, that's 35. Okay, that is what we call a crash. And of course, last year we have a V-shaped recovery. Okay, but market doesn't move off all the time in one direction, right? So you can see over here, this is a decent retracement correction, 10%, very common. Okay, that's a healthy one. If you take a look at this here, okay, that's about 6%, very healthy, very decent. Okay, and of course, just very recently we have another 4 to 5% here as well. So I'm not gonna be surprised if, let's say, this here can continue further down, maybe about 6-7%. Possible, but there's nothing for you to be alarmed of, because fundamentally, again, this is where your fundamental needs to kick in, right? Macro as well. As long as the Fed is still printing money, okay, equities market are gonna be supported. Okay, so that's something you want to take note of. If, let's say, you're more active in the stock market, or whether is it from an index point of view, from an investing point of view, or even from individual stocks. Okay. However, this, from a technical point of view, these are not opportunities or not the right time to actually execute trades, because you do see this as a V shape, right? So just wait it out. Okay, don't trade it. Yeah, right. So Elsa actually kind of like shared also that S&P right now is in a seasonality period where it tends to dip. That's very true. Okay. So again, if you have multiple prong of studies, that's where you're able to have multiple perspective of the market. Okay, and that will help you in your analysis as well. Okay, but over here we probably will not dive too much into that seasonal aspect of things. Okay, we'll still focus more on, I would say, technical, but I want you to understand or give you the idea, okay, and let you see how we can look at the market from different perspective, and why is it important. Okay, so from global market perspective, I personally feel that any dip, okay, is probably a good opportunity for you to still look for buy, until major changes from the Fed. Okay, major changes include, of course, maybe they start to scale down their quantitative easing, or they're gonna raise maybe their expectation from 2023 to maybe late 2022, right? Unless there's any of this change, I believe that any dip in the stock market would be a decent opportunity to look for a buy. Okay, so that's the big market globally. If you take a look at the gold commodities, right, same thing here. This is a huge drop, mainly also from the dollar strengthening. Okay, however, if you go and take a look at commodities again, okay, nothing has changed. Fundamentally, nothing has changed. This is really sentiment at play. Okay, so for me, the direction that I'm focusing on gold is still definitely to the upside. Okay, but of course, you don't buy here, right? Because the momentum is coming down. You don't buy at this. You don't try to catch the very bottom. You're gonna hurt yourself more than you're gonna profit from it. So don't buy here because the momentum is down. But I would not be interested in selling it, right? Because I know if I'm looking at gold, fundamentally the big picture, I'm still looking for buy setup. Still pretty convicted in that, because from a fundamental macro point of view, nothing has changed. Okay, money is still, the dollar is still likely going to be devalued. Inflation is probably still going to kick in. Okay, and eventually the gold market or commodities market will still see the strength coming in. Okay, so gold here, to drop the analysis for you guys on this week. Do not look to go and buy it now. That's not a very smart move to do. However, for those of you who are interested to maybe look for a short-term trade to the downside, at least give it maybe a couple of days to develop a flag first, because this can easily just form a V shape, and you do not want to sell it there as well. Okay, so give it a couple of days. If you see kind of like a correction that goes sideways here, okay, that will be perhaps a short-term trade to take it to the downside. Okay, for those of you who are keen in trading the gold. Right, so that's a quick one on the big macro perspective of the market. Okay, so with that, this week obviously there are quite a bit. Okay, we'll probably not go through all of them, but I want to share with you maybe some of it that are clearer. Okay, personally, I feel that you might want to then start keeping an eye on some of the yen pairs over here. Okay, there are good opportunity on the yen. Okay, yeah, before that, maybe I'll share some question that I see over here. Okay, so again, if you guys have questions, feel free to just us, okay, because as we are going through, I do not want to turn this into just like technical analysis, right? I want to provide you guys an opportunity that you are able to ask questions as well, right? So feel free to do that, right? Just type it into the chat. I'll see a notification pop up, and then I'll be able to answer them, and then we'll move together along this kind of session. Okay, so the question is, if you think that gold will eventually go back up, why do we not cost average down a little at each dip? Very good question over here, right? So back to maybe gold chart. Okay, so fundamentally, fundamentally, I'm still very convicted in the upside. Okay, so the question is more like, so why would I not do this? Okay, why would I not like start to buy here? If it goes down a little bit, I buy again. If it goes down again, I buy again. That is possible. It's definitely one valid strategy if kind of planning out properly, right? Which I do on stocks. Okay. However, on commodities like that, I tend not to adopt the average down strategy, or even some of you might know it as martingale. Okay. When you hear that word martingale, some of you probably say, that's a very bad strategy. It's not, right? If today you actually plan out very well on martingale strategy, which is where you plan out maybe have different tiers of execution level that you're gonna look to buy in. Okay, it's a well-planned strategy. Okay, people who actually lose or burn their capital, burst their account, doing this martingale, right, is because they didn't plan it. They go in based on emotional aspect. Okay, so what I would suggest is that if today you want to really do the average cost, the average down, okay, in terms of that, you need to plan out very well. Okay, so the idea is you still need a baseline as to where you will cut the entire thing. Okay, so for me over here, of course, this is a crucial level for gold to keep an eye on, 1675 area. Okay, as long as gold maintains above this 1675 and we see kind of like it being supported above this, it's likely gonna still be bullish. Okay, however, when this starts to break off very strongly down this, things might turn a little bit. Okay, there might be some event that evolve and things like that. So let's say if today you're planning to have kind of like multi levels of execution. Okay, one way you can look at, of course, if let's say this is your first zone, this can be maybe a second. Okay, and then if let's say this is where your ultimate level, that eventually if price comes back here, you do not want to hold this anymore, then maybe you need to have kind of like a stop here as well, right? Which means that if really price come all the way down, you're gonna exit and close all the trades at the top here. Okay, and you need to pre-plan in such a way that if price really comes here and you have multiple positions that you stack up, when you close all of them, is it a total risk that you're able to take? Okay, so that's a proper strategy in using martingale to approach this. Okay, for me, I don't do this on FX. I don't do this on commodities because I do not have the benefit of holding on to this asset. I don't get interest. I don't get dividend. So there's no benefit for me to lock my capital in and average down, and there's an opportunity cost in the capital that I can use to deploy somewhere else. Okay, but stocks is different because stocks, I'm approaching it from a dividend investing point of view. So I don't mind averaging down because I collect dividend for every amount that I invest into it. Okay, so that is that slight difference between FX, commodities, and stocks, and why I only do average down on stocks and not the other. Right? So that's the idea on why I don't do cost average. Okay, so just now I was saying that most opportunities that perhaps you want to keep an eye on would likely come from the yen. Okay, the yen pairs. So I think quite obvious setup over here that maybe you guys can put it into your watch list as well is dollar yen. Okay, so from a daily point of view, from a technical side, right, it's very obvious that this move up is still considered as a correction. Okay, and this is where you see this is a push down, so this is a correction, and therefore we are expecting this to deep. Okay, so this is the part where I see this short-term opportunity for dollar yen to coming back down to 107.45. However, of course, you need to have certain strategy to get involved in it. At this very moment, of course, this is not a pattern for you to look to sell. Okay, for me again, I would like to see some kind of consolidation, maybe something like that. Okay, happen over here first. So it might take some time. Okay, or it might not even happen, and this just keep going up, right? And then therefore, I will not have a sell trade. But the idea is again, you need to have a proper strategy to allow you to execute. Okay, so for me, it's a consolidation of this scale, of this size, something like that, happening somewhere around here. Then that would be a reason for me to take that trade. Okay, if you're looking at this, I think the final target you can look out for is 107.45. Okay. The other yen pair that maybe you want to add it into your list to keep an eye on it, of course, not today, you're not going to sell it today, is, but the opportunity is there, right? This one here is going to be on Euro Yen. Okay. The downside is rather huge. Okay, of course, you can see where are these zones that I've put in. Okay, 125, 119.3. Okay, those are key levels, and of course, these are key levels here as well. You can see price are reacting from there. So obviously, we can take this away for now. Okay, the downside is huge. Okay, and of course, this recent move here is also a catalyst from FOMC, but this is not a sell setup, right? It's more looking like a V shape. Okay? So probably this is going to develop into something like that, maybe a bigger correction before the drop. Okay, so this opportunity that I'm sharing with you on the yen, it's not going to happen likely this week, but it's more of like the big picture perspective, right? Long term. So if this were to really come down here, I think you just focus on this pair, where you can catch some good profits for the year already. Okay, so Euro Yen, do keep an eye on that. Okay, Pound Yen as well, but Pound Yen is not as huge in the downside as Euro Yen for now. Okay, Pound Yen, if you're looking to sell, is somewhere around 148.5. But you do see, as of today, you know, we are all seeing that V shape. Okay, same thing in the stock market, you are seeing kind of V shape, right? So again, that's why at the very start of this sharing, I cover very quickly what is sentiment, what is fundamental. Okay, sentiment are usually short term. Okay, so you can see from last week until now, this seems to be bouncing already. Okay, because those are sentiment play. Okay, so this is definitely not a trade, but I want to just share with you the big picture perspective. Okay, on all the yen pairs. Why I say focus on the downside, you can see the room, okay, of how it can develop. Okay, it's huge, right? You can see the entire space here is empty, it's vacuum. Okay, so there's huge downside opportunity on all these yen pairs. Okay, so okay, so keep an eye on that. On the yens, right? I think dollar yen is the closest that you probably can get a setup within this week. Okay, but the others are more like bigger time frame perspective. Okay, other than that, this week, of course, you might need to be a little bit patient. Okay, so like pairs like Euro Australia on 4 hour time frame, you're seeing kind of like a topping formation, maybe a double top. Okay, but of course you need to have a strategy to get involved in the sell trade. All of us have different technique. Okay, so this one here is more of like, I would say, highlighting the pair so that you will be able to put it into your watch list. Keep a very close watch to it for the week. Okay, so for me, Euro Australia is definitely on the downside. Okay, on the 4 hour scale, you can see double top. On the daily chart, there's a good chance this can come back to 5250. So the downside is definitely more attractive. Okay, very similar to it, of course, is Euro New Zealand. Both pairs are more or less correlated. Okay, so Euro New Zealand over here, if you're looking at it, the level is around 1.6610. Okay, that will be the conservative target that you can look to sell and aim for this area over here. So lower time frame 4 hour, you can see again, this is going up very slow. Okay, and if I'm not mistaken, you probably see divergence here as well. Okay, which again suggests that the momentum to the upside is lacking, and therefore there's a very good chance and probability that price would start to reverse, and therefore you want to focus more on the downside. Okay, for me, this is not a sell. What I want to see is an impulse. Okay, a strong momentum, mini one, and then maybe some kind of flag pattern or consolidation, and then this is where I'm going to take that trade down. Okay, so probably need to give it another maybe couple of days, 2 or 3 days before we are able to set up on that. Okay, I see Dean has a question over here. What are the fundamental news for FX trader that you need to look out for? Okay, very good question over here as well. Okay, now the part here is, I wouldn't say is more of like fundamental news, but you need to see it from a perspective of if I give you a very quick outlook on fundamental, look at central banks. Okay, so it's not really like news, right? It's not like you open up Bloomberg headline or the news articles headline that you see on social media. Those are not, okay. You don't really make a decision from those. Those are good to know, but I always say those articles that you read, they are reported news. It's done. Okay, they're just reporting. Okay, you are not able to do any forecasting from there. So from fundamental perspective, I give you the big picture. Okay, first you need to understand central banks. Okay, and of course, by central banks here, I'm also referring to, of course, their policy, their monetary policy. You need to understand what are some of the tools they're able to use to affect the market and control, to a certain extent, the economic development of a country. Okay, and then from there you then move into economic data. Okay, and of course, this is, for example, economic data here. Some of the common and popular ones are NFP, non-farm payroll, CPI, consumer price index, employment data, labor data, right? Those are all economic data. Okay, and you want to at least, there's a lot of them, but at least know a few that are important. Okay, and those are important data that the central bank tracks as well, because understanding how the economy is developing through these data, you're able to project what would the central bank do next. Okay, now last FOMC, before it released, okay, I believe, I'm not sure if I did share with you guys last week on like this sharing session like that. Okay, but I remember I shared it with at least our community of traders, where inflation is already there. Okay, because we look at CPI, we look at PPI, we know inflation is very hot. Okay, and definitely the central bank is also looking at that. Okay, and therefore we kind of like can preempt, or I would say we can likely know the Fed would probably look into inflation and make some changes, right? So you won't, why this is important is because you won't be surprised. You won't have that shock element when you come to the market, right? You already more or less can project, this is likely going to happen, right? And when it happens, then you will know, okay, that is expected. Okay, so that's where the economic data plays a part in fundamental, and of course then you have the impact, okay, or how is it going to affect the markets. Okay, so in short, okay, if I were to really put it in 3 categories, or oversimplified to a certain extent, this encompass fundamental. Okay, yeah, but at the same time, you definitely need to go and study a little bit more into like central bank policy. Okay, generally, what are the tools? Of course, interest rate, QE, tone. Okay, those are the policies, right? What are some of the mandate? I think is important. Okay, understand a little bit on what are the economic datas, and of course, how this part of things would affect the market. Okay, so essentially that is fundamental. Okay, so you realize there's no such thing as like reading on article on Bloomberg. Those are, again, to me, too late. By the time you see those things, they are already reported. Okay, usually that's the case. Okay, so hope that can give you a better understanding, big picture of what fundamental is. Yeah, so Euro New Zealand, Euro Australia, more or less similar things. Okay, other than that, okay, we do have a couple here as well. Okay, maybe I'll share with you them. Okay, I think pound Kiwi, pretty close to the opportunity that we're looking at Euro Odd, Euro Kiwi. Okay, but this you probably need to give it again a couple of days, maybe by I would say Wednesday earliest or even Thursday. You'll be able to see that, right? The direction is more or less the same. Okay, we're looking for the downside. You can see there. Okay, so pound odd we're looking at downside. Pound Kiwi we're also looking at downside. So Euro Odd, Euro Kiwi, pound odd, pound Kiwi, they are more or less in the same category. Okay, and then we have these are not that clear, so probably would not want to put that in so that you guys emphasize too many things. Okay, I think Aussie franc and Kiwi franc are pairs that you want to keep an eye in your watch list as well. Okay, from a daily chart, I think it's very obvious this is coming down very slow, which again, this kind of pattern tells us there's a good chance this will reverse. Okay, so Kiwi franc, look up for the reversal to the upside. Potential target at 6765. Aussie franc as well, pretty similar. You can see this is coming down very slow. Okay, so you're looking for the reversal over here, and where you can potentially target is somewhere around here at 7240. Okay, so I think Aussie franc, Kiwi franc, quite clear in the setup. Okay, the direction is also very obvious. You want to focus on the outside. Yeah, so I think this too is rather clear cut for the week. Okay, so what you can do, of course, for example, like Aussie franc, you are able to then go down to a lower time frame. You can look to trade the breakout strategy. Okay, breakout of certain high, you get involved in it, like for example here, or you can wait for a clear push. Okay, and then maybe kind of like consolidation, a flat pattern, then you can take this trade to the upside, possible as well. Okay, or let's say you're a little bit more aggressive. You want to wait for this to come back down, maybe form a mini triple bottom somewhere around here. If you're looking at candlestick confirmation, you're able to take this trade up from here, possible as well. Okay, so I want you to see there's multiple ways, okay, and all of the method works to a certain extent. You need to fine tune which one fits your style. Yeah, so that's that part on some of the FX opportunity that I would like to share with you guys for this week. Okay, I think the closest here, perhaps if I were to pick some, is to really focus on this dollar yen, Aussie franc, and Kiwi franc. Okay, these are the, I would say, more mature setup that you might get it within the week. The rest that I just shared just now, you probably need to give it a little bit more time. Okay, I see Adrian here asking, there's a falling wedge in gold in H1 and H4. Let me take a look at that. Let's go back to gold. Yeah, I would say it's looking like it's developing, right? Which is great, right? The fact that you're able to kind of like forecast and project this pattern here even before it's done, is great. Okay, because I would say most of the traders, if I take this away, okay, they probably can't see what's developing. Okay, but the fact that you can actually identify this, to a certain extent, I know you're pretty well versed in technical analysis too. So yes, I agree that this is forming a wedge, and in an Elliott Wave perspective, you expect this to come back down first, right? 3 times. Why? Because Elliott Wave is 1, 2, 3, 4, 5. That completes the ending diagonal. And if you like some confirmation, I believe you already see that. Okay, RSI divergence. Okay, so again, a pattern like that usually indicates that there's a lack of momentum to the downside, and therefore you would rather focus on the upside. Okay, so yes, okay, so you can look for the buy, but again, if let's say back to 1 hour, if I understand that there's a good chance this will come back down first, of course I won't buy here. I will wait for this to dip a little bit lower, and then from there I'll see if it's still a worthwhile buy, right, when it comes back down here. Okay, and then maybe we'll look for the breakout or things like that. This one here, probably you need to give it 2 days. You might get this completion by Wednesday. Okay. And to add on, if you're looking at the buy and we are seeing this setup, I might get involved in it, right? So I might want to come back on Wednesday and see if this is a setup. If it is, then yeah, that's how we can get involved in it. Yeah, so yeah, that's because you are asking a question. So to confirm that, yes, this is definitely a wedge, right? This is definitely a pro pattern to it. Okay. Cool. I see Matt here asks, what's the difference between correction and consolidation? Honestly, no difference. It's basically just a way to describe the movement of the market. Yeah, so you realize that there are different terms traders use in the market, but they are more or less referring to more kind of like maybe the similar thing, right? So consolidation, correction, range, they're more or less really the same thing. Okay, just telling you market is not really moving. Words like impulse, strong momentum, I don't know, some people use it like engulfing. Okay, they more or less tells you the same thing, right? Okay, so hope that's pretty clear. The way here says dollar yen is a little bit fishy. Yeah, right. To a certain extent, because you have two forces playing out on dollar yen. Okay, you have the yen, which strengthening, and then you have the dollar, which is also strengthening. Okay, and therefore you see dollar yen did not really move much compared to like pairs like maybe euro dollar, right? Very clear direction. Euro yen, very clear direction. But you realize that dollar yen did not move much, right? Because dollar is strengthening, yen is strengthening. Both of it are like fighting the tug of war. Okay, so price is just not moving. Okay. Good. Great. Okay, so I see another question here on the stock side. The two stocks that is looking at is CLF and FCX. Okay, CLF. Okay, Cleveland Cliffs. Okay, this chart here. Okay, if I were to quickly look at it from a pure technical point of view, you want to focus on maybe short term to the downside. Okay, there are a few key zones that you want to keep track of, I would say. Okay, somewhere there to be a little bit more conservative. Okay, this is more of like a pattern that looks like that. Okay, a wedge, a diagonal. I think there's a divergence too, right? Okay, for this here, do not have. Okay, but if you take a look at the daily point of view, you have from this high to this high. Okay, then you have that divergence. Okay, but within this there isn't. Okay, so again, this just simply tells you maybe there's not much of a confirmation, but I don't trade or make a decision just purely on RSI. Okay, for me, this pattern is still very clear. Okay, if you ask me how I'm gonna look at it, if let's say this forms a consolidation here, I'll probably take the trade down short term towards this or even here. Okay, so that's how I'm looking at that. Yeah, so daily it's more or less similar things that we are looking out for on chart, right? So yeah, that is purely on technical point of view. Okay, I never really hear of this stock before, so in terms of like fundamental, probably I won't be able to give you much insight as of now, right? Because I'll probably need to do some understanding from there first. But technical wise, this is likely looking to the downside for now. Okay, FCX, yeah, the momentum is now to the downside. You can see, right? So if you're looking at this right now, there's a good chance the momentum will follow through back to 2940 area, okay, which is this low here. Okay, so again, if let's say this forms a consolidation, then there's a good chance the momentum will bring this down towards 2940. Yeah, so most of the stock, because of what's happening on Thursday and Friday last week due to FOMC, you do see them making a dip the downside as well, right? Most of them, not all. Therefore, you know, I would say short term, more or less similar in the sentiment where the current momentum might continue to push them lower. Okay, but if let's say the fundamental of this stock is going to be strong, that's an opportunity for you to look for a buy chance from this kind of like correction. Yeah. Chin has a question here. How does risk on risk off concept play? Okay. Pretty straightforward actually in the event of what happened last week. Okay. So if you take a look at like, you know, I would say yen pairs, okay, are pretty obvious in the risk on risk off environment. Okay. The idea of risk on, risk off, okay, a lot of people over kind of like complicate it, but wanted to share a view over here, you know, very, very easy to understand actually, okay. Um, just imagine like risk, okay, in this case is a switch, okay, or a button, okay, and therefore you have two options, right? You either switch it on or you switch it off, right? So imagine if today you decide to switch this button on, which is risk, okay, and it becomes a risk on, okay. So what it then means is that you are willing to take risks for a better return, for a higher return, okay. And of course, the opposite here is if today it's risk off, you're just simply the opposite, not willing. So of course, this is a very, again, oversimplified way of understanding, but it helps, okay. So if today you are willing to take risks, okay, under which circumstances or under which environment would, you know, just imagine, right? If today you are a trader or investor with a lot of money, okay, you're definitely going to be a little bit protective of capital, right? So you would then have these two modes, okay, where first you are willing to take risks, okay, you are a little bit more aggressive, and then you have the other mode where you want to protect your capital, right? So you're not willing to take risks. So you need to then understand at what situation will you be willing to take risks. Most of the time is because maybe the market environment is rather certain, things are looking good, outlook is positive, right? Then you're willing to take a little bit more risk. But if let's say there are a lot of uncertainty, there's some panic, there's some fear in the market, not sure what's going to happen, that's where you are going to be protective of your capital, right? And that's where we say that's a risk off environment. Okay, so if you take a look at 2020 March, okay, where we have like a global lockdown, we have this pandemic rising, there's a lot of uncertainty in the environment, okay, and that's what we call risk off environment. Last Friday or Thursday, okay, where we have FOMC suddenly shifting from the stance of 2024 tapering to 2023, okay, raising rates. That's also a fear element being put into the market, right? Because suddenly there's uncertainty, okay? Because things change, right? When you decide to do it on 2024 and then suddenly you say no, we do it on 2023, things change, that's uncertain, so that becomes a risk off, right? So if you take a look at JPY, usually when there's a risk off environment, the yen will strengthen, which means the pair will drop, okay. If I bring you back to March 2020, okay, over here, okay, you can see that as well. March 2020, that's where it dropped, right? Because of the entire pandemic as well, causes uncertainty, the yen strengthened, it drops. So same thing over here based on last week, okay, that sentiment pushed the yen down. So opposite, just imagine, right, exactly the opposite is going to happen probably. So that's a very short crash course about risk on, risk off, okay. We call this sentiment, right? When we talk about risk on, risk off environment, we usually refer that to sentiment analysis. Yeah, I hope that's clear. Hey, Jennifer here asks about lucid trading. Very interesting. Is it a stock? No. Yeah, I'm not sure what you are referring to as lucid trading. Okay, maybe I'll probably need to go find. First time I hear about this term as well. Wei says boring, crypto no crash. Okay. If you look at Bitcoin, okay, which I do, okay, on a daily scale, maybe some of you also look at Bitcoin, right? I think you still remember back then we say don't buy, don't immediately buy here, right? Want to look at the correction for it to develop. It did not really do that, and of course, it kind of make a dip because of dollar as well. Okay, when the dollar is strengthening. Same thing on Bitcoin over here. There's a good chance it will probably come back down to this low right now with the current momentum. Okay, this is gonna be crucial. Okay, this bottom 30110. Okay, this area is going to be very crucial because if you take a look at the daily, okay, it's very close to this zone here, right, which is more or less, to me, is the same. Okay, yeah, draw area, this zone. Okay, now it's very crucial that price needs to maintain above this, which is somewhere around 2950 and above. Okay, 29,500. Because if this level is taken out impulsively, very strong to the downside, the momentum is going to be strong, breaking this zone. You're probably going to see it dip all the way back to like below 20,000 fairly easily. Okay, because imagine it's more like, this is a floodgate. Okay, this zone here is a floodgate. Okay, if this door, the gate, is broken, okay, the water is gonna come crashing down. Okay, and how do you see that in a way of why I say that is because when this level is broken, majority of the people, especially on the retail side, is gonna be in a panic selling mode. Okay, they'll be like, oh no, the support is broken, it's gonna go down. Then they're gonna sell, and it's gonna be a vicious cycle. And that will push price even faster to the downside. Okay, so keep an eye on this zone, is gonna be very crucial. When I mean break, I don't mean just touch like that. You need to see it break and maybe form kind of like a mini consolidation below that. Why I say that is because this can easily just break and come back up. Okay, and then you wouldn't want to sell here. Okay, but just be very aware of this zone on Bitcoin. Of course, if that really breaks, it can easily dip below 20,000 fairly quickly. Okay, so just take note of that. Those of you who are into crypto, into Bitcoin. Yeah, so yeah, that's on the crypto market. Good. So if you guys have questions, just post it up, right? Then I'll be able to share my view with you guys. Adrian asks about Aussie Cat. Yeah, I mean Aussie Cat, Kiwi Cat, I'm looking for an upside, but I don't think it's very obvious right now, or I would say this week is not, it's not a setup that I'll pay too much attention at the moment. Okay, yes, I'm still looking for the buy, but it's apparent that if you have better opportunities, then focus your energy on them. Okay, Aussie Cat is not something that is super clear for now. Okay, but if you were to pick a direction, it's definitely to the upside. Euro Pound. Okay, I would rather focus on the upside as well. Okay, from a daily perspective, from a TA point of view, technical analysis, there's a good chance this will come back towards 8,720, right? Forming something like that. Then maybe from here, there are multiple ways this can develop. It can keep going, it can come down, but I think there's a good chance it will come back to 8,720 first. Okay. Yeah, it's one of pair. I'm also having this in my watch list for the week, but again, need to give it time, right? The direction to me is rather clear. I know I only want to focus on the upside, but unlikely we might not get a setup to buy it this week, right? And therefore, just now I didn't really on that, right? But direction is focus on the upside. Yeah. Sean asked about SIA. I think that's Singapore stocks, right? T6. Yep, right. So Singapore stocks. Okay. Okay, Singapore market, Singapore stock is a little bit small, okay, but you can see patterns happening as well, right? But usually in a small market like Singapore stock, Malaysia stock, usually technical analysis might not play out very clear, okay, but I think this is more like one of the bigger cap in Singapore as well, okay, so you can still see pattern developing here, okay, like that. Have like a double top, okay, this is a V shape. So if I were to put on the pure TA point of view, okay, this has a good chance of developing something like that. Okay, so if you're looking to buy, add in a little bit of fib here. Okay, it did touch that 50, so probably you want to look out for this right now. Okay, so what I'm expecting is there's a good chance this will probably develop something like that, and then maybe one more move down, and then this develops that correction. Then probably that is ready to move to the upside. Okay, there are definitely still different scenarios it can happen on a chart like that. Okay, but if you're looking to buy, this would be what you want to see. Okay, if you want to buy. Okay, if you're wanting to trade it and you want to sell it, then what you want to see is this continue to go higher. Okay, and this develops into something like that. That's your sell trade. Okay, but eventually it will still probably come down towards somewhere in this zone, and then maybe from here it can still go back up. Okay, so if you're looking to sell, you want to see this. Yeah, so what I just did is what we call forecasting. You basically prepare yourself to understand, or kind of like you want to prepare and know what you want to see before you can take a trade. Okay, so again, if you want to sell, you want to see something like that. If you want to buy, okay, you probably want to see something like that. Okay, this comes down and then this forms something like that. Then this is your buy setup to take it to the upside. Okay. But of course, SIA is basically Singapore Airlines, right? So it really depends on the pandemic, the lockdown. Because at the end of the day, if we are not able to travel, okay, airline industry is still gonna suffer to a certain extent. Okay, yeah, so you can't just look at technical charts. You also need to understand a little bit on what are some of the external factors or forces that can also impact your stock price. Okay, yeah, so that's my view on SIA. Ethereum. Okay, so over here, crypto market, most of the time they tend to move in tandem. Okay, so you see Bitcoin coming down. Ethereum kind of like broke that already. Okay, yeah, I'll change the chart. This is on futures, right? So I'll probably look at maybe Binance, okay, which is slightly different from the chart, right? So you can see over here, more or less similar to Bitcoin right now. Okay, this level here is definitely crucial, right? This zone, okay, I wouldn't say that's the area, okay, which is where we are right now testing that. Okay. Same view on Bitcoin. I strongly believe if this here is broken, Ethereum is still okay. Okay, we have still multiple key levels that we can keep an eye on. But the thing is, again, if Bitcoin were to crash, I would say big crash, but maybe a major dip, Ethereum can probably see that dip down here as well. Okay, so right now it's definitely crucial at this zone, okay, because if it's gonna break below that, there's a good chance it can come back down to maybe below 10,000. But you might feel shocked that, oh, that's a huge dip, right? That's about 80%. Okay, but in the crypto market, it happened before. Okay, look at that. That was in March. Okay, same thing, March 2020. So you might see that, wow, this dip is 80%. It looks scary. Okay, maybe for some of you who are not familiar with crypto, you might see that, wow, 80% drop is scary. Okay. It is, okay, because you are literally losing 80% of whatever investment you did if you invest at the top. Okay, but in a crypto environment, it's not surprising. Okay, that's why I always share to traders is that if today you're very new in the financial market and you want to go into crypto, you're probably just gonna likely lose your capital sooner than later. Okay, because it's a very volatile market. It's not suited for everyone. Right? So this dip is a 70% dip, which is more or less over here similar, right? But at the end of the day, this still rally. Whether this will still rally back up, very hard to say. Okay, but I want you to see that in the crypto market, a drop of 70-80% is not unusual. Okay, look at Bitcoin. Okay, you think that this is a huge drop, 50% drop? No, right? Last time, this is a 71% drop. Okay, if you look at even before that, okay, if you don't even take all the way there, that's a 60% drop, right? If you were to take all the way from this high, that's an 85% drop. Okay. So that's the crypto market. Yeah, so it's definitely very volatile. It's not suited for everyone. So if today you decide to trade on it, just be very sure you know what you're doing. Good. Okay, right. So yeah, Ethereum is right now trading below 2000. Um, cool. Okay, so Benjamin has a question over here as well. Is there a time or date that we can expect this major news? Or is it gonna come in randomly? It's not random. Okay. All this news that we talk about, like FOMC, central bank meeting, when the NFP data is coming out, when the CPI data is coming out, when the employment data is coming out, they are all planned. Okay, but of course, from time to time, you might get some surprise news element. Okay. But most of the news when we talk about fundamental here, they are more or less pre-planned. Okay, so all you have to do, there are multiple websites they can go to, right? Like Forex Factory, FX Street. These are the two very common one. I think there are others out there as well. Okay. Yeah. So just choose one that you find comfortable with. Okay, and then that's where you can get that news. Right. So yeah, Adrian says not for the faint heart. Yeah. If you are into crypto, likely is the newer generation, right? The younger generation, they are more into crypto. And I can share with you from, because I'm very active in this industry. And I've been in touch with traders and investors across various demographics. Some of them are maybe on the older generation. Some of them are like super young, in maybe uni. And the reason for them to invest into crypto is just crazy. Okay. They'll probably just say something like, um, I remember back then, one of my friends shared me, there's this Doge coin, right? And then recently, I think there's another new dog coin. Okay. And it was that period where Elon Musk is kind of like supporting Dogecoin, okay, on his Twitter as well. Then there was this new dog coin that was launched, okay, and this students, younger generation crowd were just saying that, let's all invest into that. Okay, and I think it's something about like Sidu or Cebu dog, right? Let's invest into that coin, and the reason they give is because Elon Musk supported Dogecoin, okay, and that's also a dog coin, and therefore there's prospect to it, and let's invest into it. It totally does not make sense. Okay, so just understand, if today you're going into crypto, please at least educate yourself a little bit more in the crypto market before you decide to trade it. Yeah, hope that helps. Good. Any of you guys have any other questions you'd like to clarify, or questions you would like to know? Okay, so for those of you who are perhaps joining us like the first few times, or maybe the very first time, okay, so what we usually do is something like that, right, which we experienced today. At the very start, I'll share with you a little bit of my view, my opinion, my analysis, some of the setups that I'm monitoring, okay, for the week. And then for the remaining session is actually where we open up for Q&A, make it a little bit informal, give you an opportunity, a platform to also interact, ask questions. Yeah, right. So Matt here actually shared is Shiba, right? So yeah, I'm obviously not a fan of dog. I'm not a fan of all those altcoins. Okay, yeah, but that's Shiba coin, right? If you go and study it, it's just hilarious. Okay. Yeah. Hey, one question here I see. Adrian asks, can you please tell us how to handle FOMC? Now I wouldn't say you want to handle FOMC, but I would really go back to understanding the fundamental of the market, right? Which is really going back to like central bank, economic data, okay, and then the impact of the market, okay, which is what I kind of like summarize um at the earlier part where we did this sharing here. Okay, FOMC is basically a central bank, right? And last Wednesday or Thursday, that's where they came out with an update of their monetary policy, right? Their projection. Okay, so that's essentially the central bank part of decision, and therefore that decision came from the economic data development, and therefore that has an impact in the market. Okay, so obviously it's very difficult to trade during that specific event of FOMC. Okay, and I personally don't suggest you to do that, but understanding it give you some level of confidence, some comfort, some conviction when you come to the market. Okay, because the more you understand, the more you know, the more comfortable you are going to be in the market, because you're not likely going to be surprised suddenly. That to me is really why you want to look at fundamental, and of course the big picture here helps as well. Okay, like understanding fundamentally, if the central bank are gonna keep printing money, okay, there will be a devaluation. That's also the understanding of fundamental. Okay, so I don't trade those news. Okay, so the idea here is again, I would suggest is not to trade that. Okay, oh, okay, I see wrongly. Oh, you meant FOMO. Okay. Yeah. Okay. So good. Lucky I saw. Okay. That I was very similar. So I kind of like kind of like saw it wrongly. Okay. Good. FOMO, which for those of you who do not know this term, is called fear of missing out. Okay. How to deal with that? It's not gonna be an overnight thing when you want to work on this aspect, right? Because this essentially, okay, is the psychology in trading. Okay, it's a very big topic, okay, but at the same time, it's very important in kind of like developing your trading psychology, your emotions. Okay, now there are of course a lot of ways to do it. All of us have different ways to kind of develop this perspective, this side of it. Okay, some I'm not sure if you guys hear about like some of you probably hear about how traders meditate. Now I don't really do that. Okay, but I know traders who do that, right? And I know to a certain extent, some traders actually benefit from it. Okay, now meditation is not really about those, like you sit there and then you just for 5 minutes and then things like that. No, it's a very conscious effort, right? And meditation more about building at the end of the day self-awareness. Okay. So if you understand that at the end of the day, the objective is to raise and build your self-awareness, there are also other ways to do that. Okay. Of course, one way is to do reflection, or I would say self-reflection. And in order for you to do self-reflection, perhaps journaling helps. Okay, or similar to like diary. Okay, penning down your thoughts, how you feel, reflect about it, and then see where you can evaluate, right? So it's a constant process of all this, right? You can add on a little bit here and there as well. And it also takes maybe, if you have the opportunity, call it accountability. Okay, so I'm throwing all this in, right? You need to probably then figure out like which one aligns with you, like which one rings a bell when you're sharing. Accountability here also refers to like trading partner or even partners. Okay, more than one, it can be in a group. But a lot of people, when they have a partner, or let's say a community or a group in trading, they over exploit it the negative way. Okay, when I talk about accountability, trading partners, a community, I'm not telling you to join a group where you share trade ideas or signal, right? Even worse. Okay, no. Bouncing of ideas is fine. It's healthy to a certain extent if the maturity level of the traders are more or less equal in that group, right? In the community. But if you are looking like, tell me what to trade, okay, then that's not gonna help you, right? The idea of accountability is more like you have blind spots. Okay, all of us have blind spots. Blind spots are things where no matter how hard you try, to a certain extent, you're not able to identify that weakness. But from a third party perspective, it can be very clear to the other person. Okay? Even I have blind spots, right? So this is where the accountability comes in. The trading partner or community comes in, is you're able to help one another and give constructive feedback. Okay, and I can share with you this helps a lot, right? to me back then when I got started in this journey, I have friends, and of course in school, okay, was fortunate enough to also have like investment clubs, and then we have a group of traders. All of us are students, so form kind of like closer groups, who are very interested in the market. That whole journey helps as well, right? Because we tend to bounce ideas, we kind of like give each other feedback, and of course with accountability, you are a little bit more disciplined as well, because it's it's more like you need to answer to the other partner, right? To your partner. Okay, so that subconsciously will help you develop the ability of self-awareness again. Okay, because if today you have a trading partner and you anyhow make trading decision, then your partner asks you, then you need to answer for it, right? That's what accountability is. And slowly through this process, you're gonna be more self-aware, right? Because in our Asia context, we say no face, right? If you if you keep doing stupid mistakes, you lose your face. Okay, so that whole process of helps, right? All this is coming together, right? So uh this is where I think it's not gonna only help you in FOMO, in the fear of missing out. It's gonna help you in your discipline. Okay, it's gonna help you in your, I would say, emotional management. Okay, where when you suffer some losses, you suffer some win. You're definitely gonna feel emotional about it, right? When you suffer losses, all of us are human. We're gonna feel sad, disappointed. Okay, but how you're gonna manage that and pick up from there is the key. Okay, a lot of times you might hear people say, as a trader, you cannot be emotional. Uh, no, to a certain extent, that's not true. You are gonna be emotional, but it's how you're gonna manage it that's the crucial part. Okay, same thing if you take winning trade, you're gonna feel excited. You're gonna have that greed element. It's definitely there. It's how you manage it that makes a diff. Okay, so that is very important. Um, yeah, right. So great. I see here Marcus also say there's a bus every 15 minutes. Good way of coping with FOMO. Okay. Yeah, and I want you to know that as a retail trader, right, you do not have the pressure to execute trade. Okay, you are trading your own account. No one is telling you or forcing you like how many trades you need to take in a week, in a month. Um, Sometimes there might not be a trade, and don't feel the pressure to take it. Okay, um, that's something that you probably be able to work on it, right? So that's a good way as well, to kind of remind yourself that. Okay, but you realize that the first step to all this, the first step to this is be aware. Okay, this one is a little bit on like personal development as well. Awareness is always the first step towards improvement. Okay, because that's the phase where you know there's something I need to work on. Okay. The next part is acknowledgement. Okay, this cannot be skipped as well, because if today you're aware, but you don't acknowledge that you need to work on that, you don't acknowledge that that is hurting your performance, is hurting you as a trader, then you will not work on it. Okay, so the first step is definitely to be aware. Then you need to acknowledge. Okay, and then after that, that's where with that you start to work on it, improve. Okay, find ways to evaluate stuff. Okay, so this tool is really very important because I feel a lot of traders is probably they are aware, or some of them are not even aware of it, but they did not acknowledge that. Okay, it's subconsciously quite important. Okay, like acknowledge it to yourself. Okay, that yeah, this is hurting me. I need to work on it. Okay, that kind of acknowledgement is crucial. Yeah, so yeah, so I hope this, this conversation here a little bit on psychology helps. Okay, yeah, right. So yeah, again, I'm not professional psychologist. I'm only able to share with you what I've learned and pick up from my own journey. Um but if you really want, I think there are books out there. um I can't recall the full name, but I kind of like can't really remember the spelling as well. But his name, if I'm not wrong, is Brad Steenbarger, something like that, right? he wrote a few books. Okay, one of the book is called The Daily Coach. If I recall the book correctly. It's the book that I read many years ago. He is obviously a much professional psychologist that deals with traders, than me. Okay, so if you really want to work on this aspect of trading, go and read some of his books. Okay, probably just Google The Daily Coach and then spell something like that. You should be able to find it. Okay, yeah. So go and read that. Okay, I think this book. Okay, I would suggest that you read it because it gives you some tips and hints on how to coach yourself in the arena of trading. Oh yeah, right. So Chin here share. Put it up. Okay, yeah. He wrote a few books. Okay, so just you can grab hold of the books that he wrote. All of them are good. Yeah, right. So yeah, so I hope this part here where a lot of traders are probably not very interested into it, but to me honestly it's quite important. Okay, because strategy is one thing, analysis is one thing, understanding or I would say knowledge of the market is one thing, but the other element here is yourself. Okay, so that's also something very interesting in the world of finance is because really need to develop yourself as well at the same time acquire the knowledge of the market, then you put them together. That's more like a success formula of trader investor. Yeah, so yeah, I hope today's sharing session here is fruitful for you guys. Okay, cool, right? So we run this every Monday. Okay, unless there's some hiccup, very hard to explain, but if not, okay, we run this every Monday. Okay, so if this is something that you enjoy, you benefit from it, do feel free to invite your friends, right? Share with them as well. Okay. My objective or intention over here is pretty clear. Just wanted to really reach out to more traders and hopefully give them some proper understanding of this journey. Okay, and at least if today I can help someone to not be scammed in the market, right? Not like lose their entire saving. I think that itself is worthwhile. Okay, yeah, so cool. That's all from me today. All the best for the week. Okay, and I'll see you guys next. Okay, best. Have a good night ahead, and guys soon. Bye.